Absolute Wealth. Real investors, real results.
Hey everybody, this is John Carter with Absolute Wealth, and let's take a look at the markets. Tonight we're going to go a little different here. I'm looking at a monthly chart here. This is the spiders, so that's a weekly chart of the spiders. This is a monthly chart, and this is a daily chart. Monthly chart, we have a squeeze long. We're continuing to push higher. Weekly chart, squeeze long, continuing to push higher. Daily chart, squeeze long, continuing to push higher. Now on Friday, we got the employment data. I'm doing this video before that number, so I don't know exactly what it's going to be at. But the main thing to watch with the employment data is going to be the bond market, because the bond market's going to drive everything else. And right now, you can see what we have here is something that's unsustainable, and that is stocks at their highs and bonds at their highs. That is unsustainable. When you see this happening, it means that one of the markets is wrong. Typically, the bond market is right. That's where all the smart money is. It's institutional money. It's 15 times bigger than the stock market. So the question now is, are stocks just crazy and they're going to crash and burn, or is it possible that bonds and stocks could rally together? The big red flag I'm watching here is the NASDAQ. The NASDAQ is represented here by the Qs. On a weekly chart, has a massive head and shoulders potential top in place. Now, if we take this out, it's invalidated, but the NASDAQ typically will bottom and top 2 to 4 months ahead of everybody else. This means that the NASDAQ actually topped in September of 2012, and the S&Ps have not topped yet. So if the S&Ps can roll over fairly soon, then we have a top here in the NASDAQ from September. That typically means we have a 6 to 12 month decline looking at us. All right, so how do we know that a 6 to 12 month decline is looking at us? Well, we look at the Qs on a daily chart, and the sell signal would be 2 daily closes below the 21 EMA. So if we get 2 daily closes below that, that's the first trigger that we are potentially at a top, and that top could last 6 to 12 months. To confirm that, though, we would also need to get 2 daily closes below the 21 EMA on the spiders. If those two things happen, then I'm looking at a 6 to 12 month top. So be cautious, but in the meantime, it's one of those things where you ride this out as long as you can. Just know that's your exit signal, and to reverse and get short when that happens. You guys have a great trading day, and we'll see you at the next update.